Hey guys, welcome back. This is RE Geeks. I am here with my esteemed colleague, Mr. Michael Fielden. We're going to be talking about incredible tech stuff today. What's going on? What's happening out there? And what is going on in the marketplace? I mean, are we really seeing the market, shrinking? I don't know. We don't know what's happening. But Mr. Michael Fielden, welcome to the show, my friend. I cannot wait to hear your thought patterns and tell everybody where you're from, what you do, and what company have you been running that's changing the world.
Changing the world. Hey, Greg. Hey, everybody. It's Michael Fielden with Support Geeks on for today's broadcast with RE Geeks. Just so you are all aware of how I'm changing the world, I own a company called Support Geeks. We provide technical business and marketing services for real estate agents and brokers. We specialize in artificial intelligence, real estate applications, onboarding, and making sure that you can do everything you need to do for your marketing.
Well,
Welcome to
he's
today's
changed
show.
my life, boys and girls. So,
Yeah.
I mean, I'll tell you one thing. He's been a tremendous help for me.
Yeah, we're always excited to help you, Greg. It's one of my favorites. You and Terry. It's always good for a call.
Like a 45-minute call. But let's jump into this really quickly. So, what are you seeing in stats? Because I know you're a very big numbers guy. Walk me through what you're seeing right now.
So I'm not sure, and I know I'm in a little bit of different area for you. For those that don't know, I'm in the heart of Silicon Valley. I live in San Jose, and I've been here for 22 years. I've seen the ups and downs in real estate, and it is always cyclical. And I will tell you, the market's the market, and there's nothing you can do about it. What I am seeing here, though, Greg, is not consistent with what the stats are telling you. And what I see from my clients, brokerages, and agents is that the market is slowing down. People are getting scared.
So, when you say they're getting scared, is it they're getting scared of buying or selling or investing or renting? What are you seeing?
Right now, I think it's all of the above. I think we should start with the investor market because that's always where the biggest swings are looked for. But I think what I see from my single and multifamily home investors is that the cost of the home has gone up so much in recent months and even recent years that they can't afford to buy homes to make them rentals. So
So,
rents are starting to stabilize.
why would anybody want to buy in California then?
Well, big investment generally means big rewards. So, when I look at myself, over 20 years, I've seen a 3x improvement on my purchase price. And I can't think of anything else that's going to give me that kind of return on leveraged money.
Okay, so walk me down a path here out of pure curiosity. When it comes to, okay, Bob and Jane, hypothetical Bob and Jane Smith,
Yep.
they're living in California and they're like, gosh dang it, I'd really like to buy something. In your research, what would be the number one place you would put them?
So I think Silicon Valley, we have this cultural barrier in certain markets. So depending on where they are culturally, they might choose different areas. I would tend to put new homeowners in the Willow Glen, San Jose area, or Almaden, Blossom Valley. Those areas are generally at the higher end. They're not as high as Los Gatos, Montecito, Saratoga, but they're definitely, a single family home is going to be 1.8 to 2.2 for something that's nice and ready.
So, in your marketplace, do you see the market coming down or potential rebounding from the bottom?
So I definitely think we're in a downward trend right now. And what I'm seeing, Greg, and maybe you're seeing something different in your market, is more properties are coming to market. And what we had up until about 2 months ago was a market where if a property came on, it was priced right and it was ready to go, it might get multiple offers, but it would at least get offers. It would get disclosures downloaded. It would get people viewing the property. Interest rates have slowly crept up a little bit. And what we're seeing here is that when you put your house on the market, you're not necessarily assured that it's going to move. And people that are used to seeing something in 1 or 2 weeks are getting scared because it might take 30 to 60 days before they actually get offers.
Yeah, we're seeing the same thing. I mean, in Contra Costa County, I mean, we're seeing a big reversal in regards to price points. I have one of my clients have had his property listed for 4 years, and it's not that we aren't doing our job. It's purely based upon the fact that people are becoming much more picky because there's more options out there. But our time on market, our inventory is coming down to like just under a month. But that's the issue because people were going to look for something very specific, and that's fine. That's what they're supposed to do. They're supposed to look for what they want to buy. It's like going out and buying a car or buying a baseball hat or buying a clock or whatever. You look for what you want to own. And we're just seeing a lot of properties right now, and this is just my opinion, that people just aren't excited about a lot of stuff anymore. I mean, in Contra Costa, there's about 500 properties. 3,283 properties found. There's a lot of new properties. We're seeing the selling market come back up, but it is still struggling. Now, why is it struggling? It goes right back down to the fact that you were saying, like people are just looking for something that they can afford, which the interest rates are not that good at right now, unfortunately. But I think it can actually really come back and help folks, especially the buyers, the sellers. We're living in hypothetically, we're living in a time frame of a past era where we're like, oh my gosh, I can sell for anything. Anybody's going to buy any property at this price point. I mean, my girlfriend sold her properties, multiple of her properties, for extraordinarily high, values, and they could not sell for that in today's market. So yeah, I do think the market might be stagnating at a certain level. I would love to hear your thoughts on this.
So I don't know that I necessarily think stagnating is the right term for my area. I think what we're seeing is concern.
Okay.
I think that the numbers still aren't catching up with what's there. And I think a great example of this is that, a lot of reports are still showing this as a seller's market because I don't think it's caught up. I don't think the days on market have caught up. I don't think the prices have caught up. And when you look at some of these areas, it's becoming obvious. I talked to my buddy that owns a sign shop, the company that puts signposts in the yard, and he said they're having their best year ever. Right?
Really?
Signs are getting rented. There's more of them going on there, and the market is increasing. Now, mind you, I think there's been a lot of consolidation in this market. He's acquired some of his competitors. Some of his competitors have joined forces. But I think overall, what we're seeing is a settling of the market. And what we have to deal with a lot here, Greg, in Silicon Valley is there have been a lot of layoffs, and I don't think that's caught up yet. I don't think it's caught up to the where people are seeing what they need to see on the market. And without their jobs and without that income, they're going to end up needing to do something when they wanted to do something previously.
Okay, so let's back that conversation up for half a second.
Mhm.
So let's say the market is settling, right? For sellers, like you just stated.
Yep.
Now, if you're a savvy buyer, which I always talk about my girlfriend, but she's like a bloodhound for a deal. I mean, she can sniff that thing out a million miles away. And
Yep.
so I think there's an opportunity for savvy buyers to be like, you know what? I don't want to hurt somebody, but hey, if you need to sell, I'll buy, but I'm not going to buy at the top price. So as a real estate agent or an investor, you look at that and go like, okay, I can help both sides. Everybody, if they, the deals are structured correctly, they they make their money and they walk out free and clear. So buyers right now could be at a real advantage versus a disadvantage. Sellers may be more at a disadvantage in regards to pricing because you know what? Hey, gosh, Aunt Susie, which I actually had an Aunt Susie. I don't know where that came out of my brain, but I had Aunt Susie. She wanted to sell her home, but she couldn't sell her home for X, Y, and Z amount of money. But somebody's willing to pay, you know, whatever they're willing to pay, that's not a bad deal if it works. If the numbers make sense and you walk out cash heavy, do you need to honestly have the biggest amount of cash in your pocket, or do you just want to go liquid? Michael just put up a
Cash is
screenshot
king,
here.
baby. So I
I
want
love this website, by the way.
I do too. This is NAR RPR for those of you that aren't familiar with it. And I'm looking at MLS listings data, which is shared Bay Area data. But Greg, I want to look at this because I'm doing this for your areas and mine. And I think
Sure.
we've always talked about the fact that real estate sales are actually a trailing indicator, right?
Mhm.
Something that happened, went into contract 30 or 45 days ago is just now closing. So do you feel like it is still a seller's market in Walnut Creek?
It is it for the right price point. I have a several listings coming up, and I'll tell you one thing. The sellers have an astronomical number in their brains, but I do believe that properties are moving. I mean, the stats you have up right there, 10 days on the market on the MLS are selling for 102.1% above list. Months of inventory is going to be just under 2 months. So yeah, I think at the right price and people are logical, properties are going to move very quickly. I mean,
So just for reference here, Greg, I'm only looking at single family homes right now. These are freestanding. So as we go back, property values still going up. NAR
yeah.
has already told us to expect a 4% drop next year. This year before the end of 2025. I see that as very real. I see that as maybe a little optimistic in some markets, but what we're seeing month over month, and I think it's more realistic to look at the
Wait,
last
go
3 years.
back to that last slide really quickly.
This one,
That is a dramatic drop. What in the heck happened there? Was that the election time frame? I mean, that went through the
that's
floor.
July of 2016.
Good God.
But
But
the recovery tells me this is an anomaly. So something happened here because
26.
what
Well, that
we're
was an election year, 2016. Interesting. That is a phenomenally interesting, chart right there. So, give me your
well,
thoughts. I'm not going to quit talking,
so
but give me your thoughts.
let's do this. Let's go into San Ramon. I don't think you're going to see that same precipitous drop there, and I think that might just be related to the MLS and an anomaly because you're only seeing that in Walnut Creek. Here we're in San Ramon, and we've got same thing, a seller's market, 100%,
Yeah, it's staying strong.
8 median days on market, okay, and a sold price down about 3%, okay, which to me 3% month over month is kind of a rounding error.
Okay,
Um,
let's have some fun. Let's go
yep.
to Cupertino and then
Ooh,
San Francisco and then Oakland. Just kind of go around the Bay, right?
okay, so
Let's
let's
just
look at
let's
Cupertino.
just play. Let's look a little
I
bit
guess I got to
because
spell it right. All
yeah,
right,
I'm
here's
dyslexic.
Cupertino. Oh, all right. So we're Cupertino single family homes, median sold price down less than 1% at 3.675 million. Okay.
Shish
This
measure
this is
schmauzers.
a hot market. Months of inventory is down 141. Sold the list price 110%. People want to live in Cupertino. And let me tell you where a lot of this money is coming from is Apple, right? Apple is the
Yeah.
heart of this, and people want to live close to work. Back when their new facility opened, Greg, there were people buying homes just to raise the homes, and they were paying twice list.
Well, they had there was a documentary that came out called The $1 Million Shack, and it was a POS of a property, but it was in walking distance to I think it was Google or Apple. I think it was
It was
Apple.
Apple. It was across the street from Apple.
Yeah, and people they paid like 1 point something million for like a just a shack, literally.
And then they tore it down and built a $4 million house.
Yep, exactly.
So
It's
it's crazy. The market's crazy. So continuing to look at Cupertino, I think we go down. You see the jumps. I don't
man.
think the Cupertino market's going to be hurting as much as others. Apple is still a very, very strong company. Um, and the people that are there are typically highly educated and well prepared to stay their course.
I
Um,
agree with that. The peninsula is very much like that. Once
mhm.
we get done looking at Cupertino, I would love to see what San Francisco looks like in
Yeah, let's.
comparison because I mean the tech hub there is very similar. I have a lot of friends there and it's just banana cakes.
Yep.
And
I,
then
we,
let's go look at Kentucky and Miami
I
and
don't even know
then
where
Maine.
Kentucky is. All right, let's jump up to San Francisco. Sorry, make everybody sick with the scrolling. Let's just look at what San Francisco, California looks like right now. And this is another kind of crazy market. Now, be aware that I am looking again at single family homes. And I think San Francisco, uh, historically, a single family home here has a very small lot. And
Very
that would be
small, very
one of the
small.
differences between Walnut Creek. So as we look at the value, it's really not apples to apples unless you're staying in San Francisco. Inventory is down. We've still got 2 months. You've got 27 days on market. And Greg, I think that the reason you have more days on market is because people in San Francisco, it's so well defined that they want to see everything in every area.
Yeah, there's the different neighborhoods. I mean, there are the good neighborhoods, the medium neighborhoods, the bad neighborhoods. I've lived in a lot of those. I'll tell you one thing, I agree with that. And I think 1.7 is honestly a pretty fair price for overall San Francisco, which is astronomically ridiculous to actually say that out loud.
Yeah. Now,
But it is, I mean, it does hold its value. I mean, a couple of the houses I lived in over there, one was sold for 1.75. I'm sorry, 1,000,000 7,550.
for,
My apologies.
for those of
Um,
you in other markets, though, Greg, let's be honest.
yeah,
Guys, this is probably less than 1,500 square feet.
it actually was 1,500 square
Yeah.
feet.
And it's, when we look at 1.7, that's 1,500 square foot house on maybe a 2,000 square foot lot, probably with only one parking space,
If you're lucky.
if you're
Yes.
lucky. So, all right, as we continue, estimated property value is up over 12 months. Again, it's a very confusing market. San Francisco, in my mind, it stands in and of itself. Now, I know you wanted to do Oakland, Greg, but I'm going to hit people up with Berkeley.
Okay, let's go Berkeley.
And my reasoning is this is a little more consistent with Cupertino and Walnut Creek as far as being a standalone market. And here we have the same thing, 1.7. What your difference is between Walnut Creek and Cupertino is there's a lot of stuff in Berkeley that is very, very old.
It is old, but it's very classic. And so, I mean, if you like San Francisco, Berkeley, Oakland, if you want classic architecture, you want views of the bay, if you want, access
Dude,
to,
I'm going to hang my head here. Old is old. They're not air conditioned. A lot of them have poor floor furnaces. It's bad. So,
it's a chosen lifestyle.
yep.
And
But
you know what? If you like that, that's phenomenal. But on a hot day, boys and girls, get ready to get in the bathtub because
Yeah.
you are going to be cooking.
But let's talk about how cool it is to live in Berkeley. Berkeley is the place where every, beatnik wants to live. And similar to Oakland, it has the advantage of being just a short distance away from San Francisco.
Yeah.
So if you don't want
one drive over the bridge and you're there. Yeah.
or BART.
Or BART. Yep.
Yeah.
Yep.
Or I'm going to be going to San Francisco this weekend on the new electric Caltrain.
What are you going to be doing in San Francisco?
I'm going to see a baseball game.
Yeah. What are you going
I'm
to do
not
with
a
the
baseball
game?
fan, but Greg has invited me to join with seats at his club. And it's going to be interesting because I don't really care for baseball, but I'm excited about seeing the club and
you're going to have a blast, man.
Having ground level seats and all that. It's going to be exciting. So, all right, let's see if I can get, and our RPR is a national. So I'm going to try
someone, Lexington, Kentucky. Okay. Let's get weird.
Okay. Lexington, Kentucky.
Because here's that thing that I really want to really kind of crush upon everybody's brain pans. Is the market stalling? So we talked about the San Francisco Bay Area. Now we're across the country. We're in Kentucky. Michael, walk me through it because the numbers look almost exactly the same.
Well, until you get to that rightmost one where it's median sold price is 328,000, and this is probably 2,500 plus square feet.
Sure.
Right? Because they're getting bigger, they've got more land, but the numbers are basically the same. Months of inventory is the same. Sold to list price is a little bit lower. I think their sellers are a bit more optimistic, and their month over month sold to list is dropping, right? And I think that's what I am expecting to see more of here coming. And their days on marketing Lexington is down by 50% month over month. That just means that properties aren't coming on the market as quickly. And that does make it a seller's market. If you want to buy a home in Lexington, Kentucky, and you want to be in Lexington, you have 8 choices. Choose wisely.
Well, it's interesting. I agree with that 100%. But I mean, they are coming down. I mean, their median sales price is down 4.86%.
Yeah.
Month over month. Of course, everything's going to shift. But you're right. But their 12-month average change is up 5.6. So is that a market you want to invest in, or is that a market you want to stay away from?
Yeah.
And that really fluctuates in regards to an investor's mind. But it's fascinating to look at. Okay.
I do want to show something here that I think is important. When we look at median estimated value and we look at this red line here, this is the value over the last 17 years of home properties nationwide. Okay. It's a pretty steady graph. I think what's really interesting here is now if we put Lexington in there, home values are a little below the national average. Okay. You include Lafayette County, they're about the same as Lexington. And then if you include Kentucky as a whole, it's even less. Now, what I think is really important to notice here, and keep in mind this USA red line. Okay, if we go back up here, and I'm going to pick Oakland, Greg, because Oakland, as some of you may know, in the Bay Area, is a relatively close to San Francisco place with mixed market values. There are some nice areas of Oakland, and there are some lot less nice.
We'll use the word challenging.
Oh, counted an error. Challenging. You could call it that. Okay, so looking at this, we've got a 960,000 median sold price. Months of inventory is a little bit higher. And the fact that some of these areas are severely depressed is what's doing that. Now, your 110% sold to list price has a lot to do with the fact that a lot of these homes are older and they're sold as flips. Okay, you can't deny that some of these people are buying these homes because they want to convert them. Median days on market, 16. It's up 15%. With only 16 properties on the market, though, or excuse me, 16 days on market, that jump to get 14%, that's only 2 days difference, right? So keep that in mind. Now, if we go back here, this is what I want to point out. If we come back and we get rid of these, okay, there's that California number again, right? If we look, or excuse me, their USA number. Now, if we look at California, California starts higher in these charts and goes a lot higher, and the jump is bigger. Okay, Alameda County. Okay, this one is bigger than California, right? The Bay Area is strong. And now if we go to Oakland, which I would consider the lower end of Alameda County, this is what you see, right? And you'll notice where the market is starting to slow, but still going up in Alameda. Oakland is seeing the start of a downturn. And I would think that this is going to hold true for a lot of markets. The markets that are challenged and where people have lower incomes are going to see downward trends first.
And
if
so
we go
the real question is,
if we go to Walnut
these
Creek,
stats,
hang on, let's take an area that Greg knows well.
Where are you going with this one?
I'm going to Walnut Creek. Okay.
Oh,
and I'm just looking at the charts and ignore this weird drop. I think that's an anomaly.
Yeah, it's a weird one.
This blue line represents Walnut Creek. Okay. And if we just look at the last three years to get that, it's still exponentially higher than California as a whole.
We hold strong because we're the largest, the smallest, largest city in the East Bay where people migrate to because they go from San Francisco to Oakland, then out to Walnut Creek because of affordability, rents, you have different lot sizes. I mean, it is an interesting phenomenon.
Yep.
But
here's Los Gatos, same kind of thing. You're noticing this goes higher. Now, let's play the opposite end of the equation. We talked about Oakland, Greg. Let's talk about Atherton.
Oh, geez. Okay. That is not even on the same playing field.
It's not in the same playing field, but it is interesting. For those of you that don't know, Atherton is one of the, if not the highest price home areas in the United States. Median sold price is $10.2 million. Okay, let that sink in.
That's like Manhattan and Atherton.
Well, we'll go to Manhattan next. But guys, think about this. If you buy a $8 million home in Atherton, you're the poor guy.
Yeah, yeah. I had a friend of mine, and she's not dead, she's still alive, but she works in these markets. And one of the days I was in her office, and the guy's like, one of her coworkers was like, you know what? I can't take a $1 million listing. It's not worth my time. Yeah. I only want to take 5 to 10 to $20 million listings. And I'm sitting there going like, okay. I mean, yeah. I'm down. I'll take 25 G's in my pocket, to sell a property. Yeah. I'm good.
But let's keep going through these numbers because I think it's interesting. So there's 2 months of inventory. It's climbing. Sold the list price is down 3%. Okay. Median days on market up a third, but it's still only 12 days.
That's ridiculously short. I mean, how short that is to sell that type of property.
Now, here's what's freaking crazy.
Holy shit.
Okay. In 2021, prices started climbing and they didn't come down.
Ladies and gentlemen, if you're not looking at this, this is straight hockey stick, like just vertical.
And, you know, California, which is a pretty high thing, is way down here. This yellow line, the USA way below that. Okay, now here's what's really interesting. Median list price, $10,950,000. There are 13 properties on the market. And for those of you that don't know, Atherton is a relatively small area of homes on big lots.
Yeah, big lots.
Big lots. Okay. Of those 13 properties on the market, right now the volume is 160 million. Let that sink in.
That's a lot of okay. Let's do okay. So we're looking at Atherton right now, right? Okay, now let's jump over to Florida and go to the Florida Keys. Let's go completely opposite of Atherton and just see what they're doing, because these numbers are like,
where in Florida?
Let's go to the Florida Keys.
What's the Florida Keys?
Just type in Florida Keys.
Is it going to find that? I don't think it is.
Should.
That's not a city.
Jacksonville.
Jacksonville works. They have bugs though.
And they got bugs, alligators, all kinds of weird.
Do you know there's a Jacksonville, California?
Did not know that.
Oops, that's Jackson. Sorry.
Yeah,
guys, it's just goes to show that I can't type either.
Dude, I'm dyslexic. He and I get along very well. All right, so Jacksonville, Florida.
Here we go. 38 days on market. Sold the list is down. Almost 4 days of inventory. This isn't exciting. They're almost trending on average with the USA, Florida as a whole. Who is represented by yellow here? That's Florida. So they're below Florida. Duval.
That's honestly
not much.
Interesting
trend. Let's do, just because I'm curious.
Yeah. Oh, you want to do Manhattan?
Is that not how you spell it?
Dude, I'm dyslexic. I have no idea. New York.
Let's just do New York, New York.
New York, New York.
They don't even
have come up with numbers. Oh, that what? No, that can't be right. No, Jackson, California. So here's as Michael's working on figuring out the next place to look at. You can see that there's a trend going on in regards to real estate, and it's up and down. It's all around. It's not going to be the same for everybody. But the interesting thing is that everything is moving. So how are you going to adjust? How are you going to, take advantage of these opportunities? I had a conversation, Michael, which I didn't tell you about before the show. And I was talking to a gal that I've known for a long period of time. Beautiful young lady. And she is co-listing with me because I invited her in on a property that someone called me about. Anyways, long part of the story is I'm like, why are you not doing video? What is your issue? Like, why are you not out there? I mean, you're beautiful, you're intelligent, you're articulate. Just get on camera. And with these stats, Michael, through NAR RPR, you can pull up reports and you can barf out these numbers at an astronomical, rate of speed. Yeah. And I mean, if you're talking about Atlanta, you're talking about Florida, you're talking about California, it doesn't matter. Pick a state. It doesn't matter. you can sound incredibly awesome, even if you're just getting into the business. So,
Yeah.
Michael, walk me through what's going on in Atlanta here.
Atlanta, just more inventory. Prices are dropping. Sold to list is down. But I think they're holding true to what they've always been. Now, I do think it's important to know that, like in 2013, our last kind of little dip, Atlanta took some pain. And I think what you're going to see is this up, down, up, down, up, down. Greg,
Yeah, it happens.
I'm saying we're going to go down a little bit.
So, if you scroll up just a little bit to the last chart, is Atlanta blue or which one is Atlanta?
Well, USA, we can get rid of is red. Georgia. So Atlanta and Fulton County are basically following the same trend, but here's Atlanta.
When what happened? Those spikes right there.
So this was pricing, and I suspect what happened is low inventory.
Yeah, that could be true.
You know, low inventory affects these kind of graphs because you just don't have as many homes selling to create the numbers.
But then it jumped and it stayed steady. That's the cool part.
Yeah.
I mean, as an investor, I mean, you look at that, you're like, all right, I might be buying the high point right now, but it looks like we're trending up more. So you could buy into that market really quickly. So, okay, Michael, very, very, very fast. Jump back to Cupertino or pick anywhere else in the country. It doesn't matter. Just pick anything in the country. I want to see if the same trend is relevant. Because let's go to San Diego. Okay. All right. It's relevant. It's moving.
Everybody's going up.
I wonder what happened in October or May of 2023.
That's 2022. I have no idea there.
It's because they all bumped right there. But here's the interesting thing about this is that are we stagnating? Are we stalling? Are we, is this a good time to invest? Michael, I want to get your opinion. I'll give you my opinion after you give me yours. But after seeing these charts and these stats,
I think it's a little early.
Early for investing or early to sell?
I think it's early to invest.
Okay. If you were to invest, what would you invest in?
At this point in time, I would probably buy puppies.
All right. So you're a dog smuggler. Perfect.
I'd smuggle dogs. No, if I was going to invest now, I would probably look at single family homes in moderate areas, places that don't see big dips and valleys. I don't think Oakland would be my investment choice, but I don't think it would be Cupertino either.
Interesting you say that. And here's why I say this. When investors and other folks, come and they ask me my advice, I'm like, okay, what's your risk tolerance? I mean, do you want to go, are you totally cool with like just burning cash for a little bit? Or do you need the income from the investment to offset the down and everything else? I have always said, go and talk and look at a real estate agent that's going to be proficient in their neighborhoods, aka counties, cities, towns, whatever. And then look at where the growth plan is. Go talk to the town council, the city council, and say, what is your growth path? Where are you guys looking to expand to? As soon as you figure out where your growth path is going to, go find every farmer, every property owner, and you just buy up as much as you can, and you sit and hold on it with other people's money, aka investors, with the right interest rates. Therefore, once that city grows in 1, 2, 5 years, whatever it's going to be, now you're sitting on a gold mine. I mean, here in Danville, Alamo, California, here in the East Bay, in San Francisco Bay Area, when I was growing up, I mean, there were so many properties that we should have bought. I mean, so many properties, but we didn't do it because, everything's hindsight. It's the Monday morning quarterback. So,
Yep.
you miss out on some of the investment opportunities, but just think 5D chess. Stop looking in the rearview mirror and just start buying stuff
Yeah.
that works for your portfolio.
Yep.
And a lot of people, I mean, land right now is a big thing. I have a lot of my clients that are buying up land like nobody's business.
Yeah. They're not
So
making
that's
any
just
more
my
of it.
personal opinion.
They're not making any more. All right, Greg,
Nope.
we're just about at the end here, but I want to talk
We
about a
are.
little bit more. And Greg and I have found a new tool that
It is so cool, by
we're
the way.
both loving, and we're only going to spend about 2 minutes on it. But think it, speak it, send it, do whatever you want with it. This is basically what I have been waiting for, and it is AI for dictation. So it allows me to issue commands. I hit a command key on my keyboard and I can say, "Hey, Katie, I'll meet you at 6." And it sends a text from my computer. Or I can dictate an email or a document. And I find that I get much better results when I'm using something like this because it's in a natural narrative tone for me. I'm writing the way I talk and I have very little editing that has to go back to it. It is an app, it is paid, it is relatively cheap. I think you can get it for $15 a month or thereabouts. We don't make any commission on this yet, but try it out. They have a free version to try. And I'm going to tell you, if you don't fall in love, I'll give you the free value back, 100% return on investment if you don't like this product.
You know, the thing, Michael, that I love about this app is that I'm dyslexic and ADHD. And so being able to, and this is a legitimate thing, for me to have the ability to think it, speak it, send it, it is a game changer because I mean, for me to type, and which you know very well, I'm using crayons as a 3-year-old when it comes to my typing abilities. This is something that I really like, and it interfaces with all these other systems. Is that correct?
It interfaces well because it's an app, right? So it's running whether you're on a Mac or Windows machine. They have a mobile version coming, and they give you the option of controlling other apps as well as just doing dictation. So you can say, get my output from ChatGPT, or you can say program. I mean, it works. It's AI, it's ChatGPT inside your computer as opposed to being just outside. Try it out. You're gonna love it. Both Greg and I do, and I'm excited to share this knowledge with you. I just started using it a couple days ago, and I'm kind of still in that uh, honeymoon phase. So maybe we'll let you know next week whether I still like this.
Well, you know what? That's the great thing about hanging out with you, Michael. You always come up with new, incredible, awesome tech tips for all of us Neanderthals out there, aka moi. And it takes one tip for you to go from average to amazing. And if it costs you, the cost of 2 lattes in a week, you can use it all month long. It really, really makes sense. So, Michael, I know we're out of time. Tell me everything about where people can get a hold of you because they need to get more Michael Fielden.
Hey guys, you can reach us, Greg at REGeeks.com, Michael at REGeeks.com. You're also welcome to reach out to me, Michael at Support Geeks, and we can help you with anything you need related to your business. If you're looking to get more information on what RE Geeks is all about, what Greg and I are doing, maybe you have something that you would like us to talk about, or you'd like to join us here and participate in one of these podcast webinars, please reach out to me or reach out to Greg and let's do something and make it exciting.
I 100% agree. I mean, more people are better people. So,
Yep.
guys, reach out, hang out, let's talk. You have to burn your bonnet. No, that's not the right phrase. What's that phrase?
Whatever.
Anyways, if something's
We
bothering you,
forgot to tell them, Guys, I got a cap.
Hey, yeah, Michael got a hat. Michael got a hat.
Greg's always wearing his baseball cap, so I thought, boy, won't this be cool? I will get a baseball cap.
You know what? He's a handsome man with that hat on. As always, boys and girls, ladies and gentlemen, follow us. Subscribe to us. We're always coming live to you guys. We are literally doing this for free because we really, really freaking love the entire community of real estate agents, investors, lenders, the entire thing. Let's make our industry better. Michael will give you tips that will knock your socks off, and I'll just annoy you. But you know what? At least everybody's having fun. So, all right, guys, boys and girls, we are out of here. We have taken enough of your time. Until next time, boom, peace.
Peace out.
Love you.
Take care.
Bye.